Hello, everyone. Welcome to the Tuesday closing playbook. All right, we have like 100 questions in the chat, so I'm going to try and get to as many of them as I can answer, and then Graham should be here shortly. We'll get him answering the rest of them if he can. Obviously, on closing playbook, we have a limited window to get some trading done, so sometimes we have to move a little fast and maybe not get to everybody's questions. But let me see what I can do. So the first thing is people asking about replays of the opening and closing playbook. So we are working on a way to make it very convenient for you to get those replays. Right now, the replays of at least part of the opening and closing playbooks are on YouTube at youtube.com. I'm going to put it in the chat. youtube.com/@financial wars. Now, we are working on a new Money Crew folder on YouTube, and also a page where you can go to get the last two sessions of opening and closing playbook. So we're working on a few ways for you to be able to get that stuff a little bit more easily, but you can go there if you want. I have the links from yesterday's. I don't have this morning's handy at the moment, but if you're looking for yesterday's, I can put that in the chat. So hopefully that helps, but we're working on that. So that's one thing. The other thing is, Graham, there was a question. Hello, Graham, by the way. And there was a question about what was the question? I said, hopefully Graham will have a moment to get to it. And I just said it like 2 seconds ago and I forgot already. It was by how can I forget the name, right? PP Pants placed the question.
PP Pants.
And, let's see. Maybe it was answered by somebody else already. It looks like it was a question about how Lance's 4 p.m. payout and your 60-minute differ, besides yours being a day trading opportunity.
Yeah, Lance, I don't know Lance's strategy inside and out. I know he looks at the VIX and market maker move to then place a non-directional trade where it can go up, down, or it can go slightly against you in pay. And he's normally going for about 20% a day. So his is an income, it's a credit spread. You hold it through the end of the day. Ideally, it expires worthless at the end of the day. Worthless is a good thing for you if you're the one selling the options there, and it's normally about 20%. Mine is a price action based directional move with a 50% automated target built in. So we're going for a little bit bigger payouts, but we do need a move to get ours. But the entries are vastly different. So he's looking at what the market makers are pricing into the options market, as well as what I don't know the exact rules with his VIX, but I know it's pretty cool what he's looking at with the VIX to then get his direction on which side he's going to trade. For me, I'm using that 15-minute range and looking for a break above or below.
His are kind of like a 0 DTE version of Chuck's 1 DTE trades, right?
Yeah, similar. Yeah. And mine's 0 DTE too, but again, I need a move to then hit my automated target. Of course, you don't have to use that. If you don't use it, you get a little bigger wins when it works out. His are not, they're great. I've got nothing bad to say about them. They've been awesome. But he's looking for the full day expiration, receiving all of that premium from those options expiring.
All right, cool. All right. We had a handful of questions over the last 10 minutes, but I don't want to hold you up from your agenda here. So.
Oh, no worries. And we might go a little bit longer today because I've got some fun things prepared for you guys. I'm probably not going to go crazy on the earnings plays today. Simply because I found something that might be more interesting. If you guys do want an earnings play, my only take on today is I love Kava. I love their food. I would not be surprised if they miss earnings. That's all I'm going to say. I don't know. They could hit it. They could smash it. But here, let me just pull up Chipotle. Let me share my screen. Share screen.
You can love their food without loving their corporate earnings, right?
That's right. I think I got to remove this one. All right. Yep. The vortex has begun.
The vortex.
So here is Chipotle. I'll make this a little bit bigger again. Oops. Larger. Hopefully that works for you guys. So here was Chipotle earnings. Chipotle and Kava are pretty similar companies. Obviously, they both have a different CEO, different board, all that stuff, but similar industry, both on the higher end scale of fast food, if you will. Chipotle did not do so good. Similar trend in the stock. Again, I don't know what's going to happen. I love Kava. I want the best for them, but I would not be shocked if they miss earnings. That's my only earnings trade for you guys today. There was one on Lance's scanner that I did see, a bearish one as well today. But today I've got something different to show you. What did I miss? You had another question, didn't you?
There was a question. Yeah. So there was a question about, and I think I can answer this one, but it was signing into the dollar OP membership. So if you go to newmoneycrew.com, you'll see a login. That's not what that's for. So the dollar opening playbook membership is for our members area platform, which is oneclicktrading.com. You should get an email, although we've been having a problem with it lately. I don't know if it's because we're only charging $1, but it's we've been having a problem with the email going out when people buy. If you're already a member, though, of any of like Graham or Nate's or any of our products, and you have access to one-click trading, just after you pay the dollar, just log into one-click trading. Within a couple of minutes, you should see the opening playbook product tile added to your members area. That's where it is. It's where all the like trade alert programs and all the other educational programs are. It's not on newmoneycrew.com. It's on oneclicktrading.com. If you didn't get the email and that's the first thing you've bought from us, therefore you don't have access to one-click trading, please give our customer service number a call. I'll drop it in the chat while Graham's doing something else.
Cool. And I saw we had a couple questions about Nate's overnight options. I just looked. It looks like that was posted 3 minutes ago. So that should be there. Joanne, on 60 Minutes, shouldn't we wait for a closing candle above or below the level? Seems like we haven't waited for that. If we did, we could have gone in the opposite direction. Joanne, we did get a close below that level today. I'm going to walk you guys through that one, actually. So if you here, Joanne, there's your close below. And this one, as you can see, did not work out. And I'm going to walk you guys through it today. Oh, my word. Look at the Vold today. Thing's a monster. All right. Let me make sure I didn't miss anything. All right. We're going to get rolling here for the closing playbook. And today, again, I'm not going to be rapid fire trading earnings like we had been doing recently. Those can be fun. Not our usual strategy. Nate and I prefer to avoid earnings, generally speaking. In all of our premium strategies, for the most part, we avoid earnings. But we have a fun time with them here, knowing that they're going to be hit or miss. But they give you a little excitement in the overnight trading action. With that said, I did put together a little fun deck for you guys. So, I just put this up here because I'm going to walk you through some trade ideas. And I just want to remind you that there's no black box miracle system that prints out winning trades. I have winners and I have losers. I had a loser, well, unless something crazy happens here, which I doubt will. I had a loser today. So again, we want to give you an edge in our trading. If you can't handle a loser, please don't trade with real money. Please just do it simulated for fun for now until you feel comfortable. I actually had someone reach out today and he asked a very good question about how to know when to increase position size or to not. And if you guys had been following my 60-minute income trade, for a while there, every time I took a loser, I increased my starting stake because I know that the data shows typically after a loser, we have a nice hot streak. So today would be a good example of that. Today we have a loser. Ideally, we have a nice hot streak. With that said, I'm kind of capped out where I want my starting stake to be. And the way I think of it is the Max Payne theory. I think, okay, if I put in, let's just say $500 a day, can I afford to lose 5 days in a row? Now, the strategy doesn't hardly ever do that. I think it did it once in the full 10-year back test, but I have to keep that in mind. If I lose 5 trades in a row, I put $500 in, am I okay losing $2,500? If the answer is yes, that's a good position size for me. If the answer is no, I've gone too heavy. So that's the way to think about it when thinking about position sizing. Now, enough about losers for now. I'll come right back to my loser. I don't shy away. Did anyone take the everyday income trade from Chuck last night, or I guess I should say yesterday afternoon? And I'm curious for you guys if it worked out. I reached out to Blaine on the Chuck Hughes team, and I said, "Hey, did it work out?" Because you guys know that the way that strategy works is typically when the markets make a big move, it would lose. But Blaine here, I said, "Hey, did it not working out today? Just wanted to know, get a good idea so I could walk you guys through." And he said, "No, it did work." So he got automatically filled on his exit this morning for a 23% return. So hopefully you guys got to take a look at that. John G. Oh, you're saying the odds of losing 3 in a row is 2.25%, John? Lower. So I assume you're saying that's a good thing, right? Oh, wait. Okay, cool. Just making sure we're reading right. So there you go. For the 60-minute income, if we lose 2 in a row, even better. So for me, however, slightly different story today. I bought puts at the open. This is my 60-minute income trade. You can see the indicator there. It said buy puts. I posted in our Telegram system that, hey, I just followed the system. That's what a system is there for. So it gives us clear entry, exit rules. And we know what trade we're taking every day, knowing not every day is going to be a winner, but we're winning more than 8 out of every 10 trades. Pretty darn good. The profits are awesome. Today, it did not look so good. Today, this is my losing trade of the day. Market internals went directly against us. We got that buy puts there, right? There was one on the SPY and SPX at 9:50, and then we had our entry at 10 a.m., and it immediately went against us. Well, guess what? This happens, and I'm okay with it. By the way, I want to show you guys we're still red hot overall. So red here marks the losers. You can see losers. Green marks the winners. This is since I've been live sharing it in the opening playbook and onward. So about 45 days here sharing it with you guys live. And 5K starting out, which is what I put in every day now. That's worth $31,011 in 45 days. So look, I took 2 losers. A lot, like 40% of people got a winner yesterday because they got a better fill than me. I did not. So you can see how it's looked. Winner, 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 loser, nice streak, loser, loser, nice streak, loser, loser, little patchy period here. Awesome streak we just came off of. And then tough start to this week, not going to lie. But all in all, sticking with the system, sticking with the strategy, it's been amazing. Is it fun losing? No, it's never fun. But I try to keep my emotions in check, keep it out of the picture, and just focus on the strategy, what's been working, and applying that. So today, however, and this has happened in the past when it's gone against me, I find myself rooting on something that wasn't likely to happen, right? Market's going higher, and here I am sitting here all day saying, come on, please go lower, please go lower, please go lower. When obviously, guys, the markets were up 1%. Odds of it turning around and hitting our strikes from there, not so good. So in reality, instead of sitting there and rooting for it to go lower, today's trade was a wash. It was going to be a loser. And I should be happy that all of my other bullish positions were doing amazing today, right? Market's up huge. Most stocks were up huge. So I should be happy there. And that got me thinking, what can I do going forward, even though my bearish trade went against me today? Well, I started on this journey today. And again, this is very premature. It's just today, just for fun, just because I like to bring you guys fresh data, fresh content. What normally happens the day after markets make all-time highs? So I told you in opening playbook last 2 weeks now, I've said I think we're going to make all-time highs in August. I also think we're going to get a 5% drop at some point in August. Well, today, markets made all-time highs, fresh highs. So what normally happens the day after markets make all-time highs? Does anyone know? Ted says drop. John says pullback. We got one higher pullback inside day. All right. Well, AI is pretty awesome. Has anyone here used Gemini, Google's AI? And I'm going to see if I can pull my screen share up in front of it. Got to make sure. See if this works. So this is cool. We've walked through some little ChatGPT examples, how you can make basic indicators with ChatGPT. Whereas before I used to have to go manually code it myself. Now, once I fine tune, optimize a strategy, it takes a little work, but I can get a much quicker version up by using AI. Google Gemini, that's their version of ChatGPT, has a cool little feature called Deep Research. And it's like your own little assistant, if you will. So I asked this, what does the S&P historically do the day following an all-time high over the last 5 years? I can go back further, and I will today if you want me to, but I just wanted to pull some quick data. So I sent it off, it went and did its own research. I went to a new tab, came back, and it gave me this nice big report here where I'm not going to read the whole thing. But I did take the data that it gave me and ran some formulas. So AI is awesome. What normally happens the day after markets make all-time highs? Well, the findings are, this is for the last 5 years. There were 97 days in the last 5 years where the markets closed at all-time highs. And get this, how many times did the markets go up the next day? That would be above zero. Only 47% of those days did the markets close above 0% the following day. So we could take this further, and maybe I will. Again, this is all pretty preliminary data here that I've been messing around with this afternoon, and I've got more to share with you as we dive deeper. So below 0% or negative day, 52% of the time. So I mean, slightly more often than not, markets fade a little bit the following day. But then I was thinking about it. What if we played a safety trade here? What if we said, let me just play that the SPY doesn't fall very much the next day? What might that look like? So what are the odds that the S&P is better than negative 0.25% tomorrow? Historically, 74% of the time, the S&P stays better than negative 0.25% the next day. So if we wanted to trade options on that, and I'm not going to do this, but you could come to the S&P and look at tomorrow's expiration and just say, hey, I'm just going to bet that it doesn't fall more than a quarter point tomorrow. So what is today's price? 642.20. I'm going to bet that it stays above 640.59. So what you could do is come in here and say, I'm going to sell the 640, buy the 639. I should have just said that the other way. Buy the 639, sell the 640. This is just a bet that the S&P doesn't fall more than a quarter point tomorrow, which we know has worked out 74% of the time. Right now it's 84 cents. So that means you can turn about a 19% profit. And let me just punch this over here in my sheet. 19% profit if the S&P closes better than negative 0.25 tomorrow. And I should flip this data. We'll do this live. We'll have a good time here. Apologize if it's hard to keep up because I'm going to fly through some numbers. So at 19%, here's my data sheet. If you're winning this much of the time, and your losers would be -1, 100%. That means that you're losing here, and that would be what appears to be a negative average. So that's a losing proposition, in my opinion. Betting that the S&P is better than a 0.25% is priced into the options market. You would essentially have to win 6 out of every 7 trades. So you need an 85% success rate. We know that's not a working ideology, right? Because it only happens 74% of the time. We need it to hit 85% of the time. So what you can do from there is flip it and play the other side, knowing that you have about a 10% margin as far as odds go, that you will be right. And we'll do that here in a second. What if we said, well, what happens, what are the odds it stays better than a negative 0.5%, 86% of the time? Better than minus 1%, 95% of the time. Now, I ran the options on these already, and I found that all of this is priced in, and it's a losing proposition to take this base data and place a trade based off of it because, again, you're not getting that much juice for the squeeze here. It's bouncing a little bit all over, but at 84 cents, I think is what I just ran it at. It was not worth it. So what if we did the other side? What if we made a trade that less than positive 2.5? I'm just going to fly through this. That's 2.5%. That's why. All right. Oops, I meant to say less than. So less than a 1/4 point, which the options would probably be priced the same. Oh my word, I'm messing up my formulas here. Equals this divided by this. All right, 73% of the time, it was less than a 1/4 percentage the next day. All right. Again, with those options pricings, we need it to be, what was that number? 6 out of 7. This is not going to get us there. What if we say less than 0.5% tomorrow? Let's do the same thing here, but I'm going to run it at 0.5%. And it's going to give us almost the same exact number as lower, because I'm just trying to find an edge here for fun. Again, this was kind of speculative just to see if there's anything out there the same odds as betting to the opposite version of saying, hey, it's going to not fall more than 0.5%. Pretty much the same. The options have that priced in. So if I were to go here to the options, what do we do? $2 strike here. So it'd be a right about here. To the upside, there's no money to be made there. And 0.5%, $3 or so, we'll call it 3.5, puts us at 6.46. So again, that's 91 cents to enter on a $1 spread. You make 10% overnight, but it needs to work. For this to work, you need to win about 91% of the time. And we know that typically doesn't happen. Now, you could take this further. You can take this further to do all sorts of things. Iron condors, butterfly, or like what Chuck's doing really is a good example of what might be the best play falling today, because you know it's going to most likely stay within this range. There's an 87% chance that it stays within a 0.5% range on either side tomorrow. Does everyone see how I got that number? And I apologize, without Nate here, it's hard for me to keep up with the chat. But there's a 87% chance that it stays within a 0.5% range tomorrow. So, in my opinion, the best thing to do would be to try and trap that price. I'm not going to do that here. I know Chuck, that's what his strategy is all about, and it's actually like the perfect day for doing that. So if you guys want to check that out later, you can. But my journey continued, my journey today. So then we just looked at what the option said. No soup, no good for the way I typically trade. Again, if you want to trap the price, that might work better. Then I said, well, let me take a look at it another way, right? So today was a very bullish day in the markets. Here I was sitting here all day rooting for it to go down. It wasn't going to happen. It was a very strong market, which is really great for stocks. Bad for me today, but good for stocks. So then I said, well, what if we break down the S&P 500 by hour of the day? What do we find as the most profitable hours of the day? And again, I probably won't have a trade for you guys today, because what I'm going to show you, you could apply to tomorrow. And I'm going to do it for free. So if we look at this chart, breaking down S&P 500 by hour of the day, that blue line is 9:30 to 11 a.m., pretty bullish time, generally speaking. Red line here, that's 11 to noon. Typically, if you watch the stock market, you'll notice more often than not, when days are bullish, you'll notice it open higher at the open, and then around 11 to noon, it typically cools off going into lunch. So just imagine that. It's normally what happens. But what happens at lunchtime? At 12 p.m. to 1 p.m., look at that line. And keep in mind, guys, this is 12 years of data right here. Very, very bullish from 12 to 1. And what about 1 to 2? Also bullish, kind of similar to that opening hour and a half there. So from 1 to 2, also bullish. And then towards the end of the day, it's kind of mixed. These are the end of the day averages in the S&P. So if you break it down by hours of the day, this is the net opening bell to noon, because again, we get up and retrace. On net, you're averaging slightly above 0, which is good. That's positive. Over time, S&P trades every day. That stacks up. But from 12 p.m. to 2 p.m., look how bullish this is. Very, very green. And then the end of the day, not so much, typically speaking. So I said to myself, well, what if we take two forces and combine them together? What if we take strong days, we wait for that typical, going into noon cool off, and then trade it from 12 p.m. on for a nice move higher? And so my journey continued into the options Omega. I know some of you guys got this. Again, you don't have to get it. We don't promote it. It's a third-party resource, Option Omega. It's really great for just testing options and seeing what may or may not have happened. So here is the SPX. And I said, what if we take a bullish day, and I'll walk you through this whole thing. We make it so a minimum move up. So if the market's from open till noon, make a move up of at least 0.5% or more. Right? We're all on the same page there, 0.5% or more. And then from there, we initiate a bullish trade, just looking for 20% return on investment. How good is that? So try and stick with me here. I set the minimum entry time at noon, right? And the only trigger it's looking for is a bullish day in the market, 0.5% move higher that morning. If so, between noon and 3:30, it would enter a long position. And you can already see how it worked out here, but pretend you can't, so you can be shocked and amazed. And then I set a bullish debit spread like I normally do, but instead of wrapping it, I just went a little bit safer. I went into the money. So this is delta here. So we'd be looking to buy around the 60 delta and sell the at the money 50 delta. So if you're looking at think or swim, again, this is not for today. This is something to chew on for the future for you guys. If you look at the delta here, so this is tomorrow's expiration. So it does end up being a wrap order here in this case. But it would be basically you're buying the 60 delta. So you see the delta, 60, and then we're going to sell the 50 delta, so 49. And you'd enter at this price and then set a 20% profit target. Let me just give a second here to make sure everyone's tracking here. And don't worry so much about the option selection. I just want you to understand the basis of what the strategy is going for. We'll keep playing with this in the future for you guys. John says, I like it. I know we have a little delay from me to the chat, so no worries. I'll give you guys a second there. Again, essentially, we're just saying if the market is bullish in the morning, makes at least a 0.5% move higher, we would then look to enter from noon on, knowing that this is a typical market pattern from noon through 2 p.m. We're doing the 0 DTE options. This is over the last 2 years, and we can play around. Again, this is very preliminary. I haven't tested this thoroughly by any means. Let's see what. Oh, let's go to 2013. Let's see what it looks like. It's going to take a second. I have not checked this. So if it's abysmal, then just scratch everything I just told you. And I mean, it just needs more development is what that would mean. But we'll see. Keep in mind, I like to run it back through 2022 typically because SPX listed the daily options in 2022. So it really doesn't make sense to run it back to 2013 because you're only going to trade on Thursdays a lot of those days. So here you can see it's still 85% win rate. The Cager is not that good. But let me just run it through 2022 just because of that options listing 0DTE. Oh, that one went negative. So what I just showed you was so cool. Now it needs a little bit more polish, a little bit more fine-tuned. But let me walk you through it for those of you who have been testing out various strategies. Just what I quickly found this afternoon. Again, we just saw that it needs a little more polish so far, maybe a VIX rule or something else. But over the last 2 years, if you entered following a 0.5% morning higher, if you entered at around noon, you can see noon is the minimum entry time. So not every single one was noon because that 0.5% move higher sometimes didn't come until the afternoon. But typically entering around noon with a bullish 0 DTE debit spread and using a 20% target, this is what it looked like over the last 2 years. Now I'll play with this some more because I love doing this stuff and see if I can find something that's worked really well since the 0 DTEs were listed. But the cool thing that we can do here is then we can play with it. We can say, okay, what if we want to go with a just slightly bullish move that day? What if it's a 0.25% move higher that day? Again, I have no clue what's going to pop up on the other side of this. We're doing this together, live for fun, impromptu. Cager, not so good. And just to let you guys know, with a win rate like this and a negative Cager, that probably means either A, we need a stop loss, which typically I find that stop losses are really hard to pull off. I've seen them work, but it might just mean that we need a better profit target system. And we're not going to get all the way through this today. I'm going to just keep playing with it. Or it could mean that we need a bigger minimum move up. But let me see what just happens if I raise this. And hopefully I didn't outprice our options. I probably did. Got worse. All right, let's reset it. Let's go back to our 0.5% move up. Let's set that 20% profit target. All right, this is where we started. This is where I'm going to keep playing with it from here. This is the best result I've gotten so far. But as you can see, based on the last 2 years, again, I need more testing here. I need more proof. But ideally, maybe we can pick up a new strategy that we can just trade mentally on top of what we're already doing. Where if we look at the markets and we say, hey, we're up a 0.5% today, maybe I might want to do this. Or whatever this number comes out being, depending on the rules, we'll finally optimize over time. We can see, hey, is there any additional opportunity I can pick up today for a little extra bang for the buck? So anyways, this is what I wanted to show you guys today of what I was messing around with this afternoon. Rick wants to know if 0.75 gets better. Let's see. So if we say, hey, let's get a little bit more bullish day, let's take a look. Still positive. The Cager dropped a little bit. Still really good win rate. I mean, 51%. Keep in mind the markets do about 10% on average now. So that's pretty darn good. And you don't trade it every day, right? This is 2 years of data. So there's 500 trading days in here, roughly speaking. Only 84 trades because as Rick asked, we're only entering on some of the more bullish days in the stock market. So anyways, this is just something I was playing with today. Let me know in the chat if this is something that you enjoyed. Again, this was very impromptu, spur of the moment for you guys. But if this is something you'd like for me to dig in deeper to and keep exploring an opening and closing playbook and report my findings back here, give me a yes in the chat. If you did not like it, if you thought this really isn't worth the time, give me a no. I want to do what you guys prefer. I would much rather keep you guys interested than not interested. Jason's saying 20% capital risk is a bit aggressive. Yeah, you can play with this all you want. I really prefer to look for win rate in our average winner because I know I can play with the cager by just manipulating the allocation portfolio. And that's not really what we want to go for. We want to go for average win or average return and win rate. And actually, you don't even care about win rate. I just know you guys like high win rates. I do too. We like winning. But as you guys know, this could be 50% win rate. And if this was 100%, you'd be rich. So, yes, it was just a brainstorming session, John. This half hour can just trade, please. We could just trade. Again, I was going to hopefully find you guys a trade based on this data, but nothing ended up turning up that was super, super high conviction for me. And if I'm not taking it, I'm probably not giving it to you. Everything I give to you guys, I take with my own money. So that's why there was no trade for you guys today. But I did hopefully give you guys some food for thought that we can report back on and check out. And again, ideally, I want to get the most amount of data here that we possibly can, like as far as time frame, so we know it works in all market conditions, and then we can optimize from there. And if you want to take a trade, you can be my guest, and you can take this data and run with it because you can trade options up till 4:15. So you still have 9 minutes to place a trade. Now, with that said, like I mentioned, typically 87% of the time, the markets stay within a 0.5% range tomorrow. So it's a great day to learn a strategy that bets on the markets to stay within a range. And we're going to play that for you guys here. It was what I had Chuck on Sunday night. We walked through the strategy. It's very different than anything I do. Very different than anything Nate does, and very different than anything Lance does with his 4 p.m. payouts. Basically just betting that the stock market stays within a 1% total range, which we know happens more often than not. You'll see from the data, about 75% of the time it stays within that range. However, as you'll note here, when you see all-time highs, again, that mental note can go off in your head. Wait, all-time high today. There is something that worked exceptionally well when markets close at all-time highs. And that's the strategy we're going to walk you through right now. So, Dave, if you don't mind pulling that up, guys, stick around. Check this out. I will go through the chat now and try and answer some of the questions here because I know we had a bunch. And again, my handy sidekick, Nate, wasn't able to make it this afternoon because he's busy on a golf outing, it seems. So
I think it's for charity, though, right? Like we're giving him some credit for it being for charity or something like that.
Oh, is it? I
don't know.
was
We're
going to give
gonna
him no credit. That's what I prefer.
We're going to pretend. Maybe the charity is to his wife that he's not home.
Yes.
But
Yeah.
All
Awesome.
right, we're going to flip it over. Thanks a lot, Graham.
Thank you. We've got a lot to talk about tonight. Obviously, I've got my good friend, former mentor, Chuck Hughes, coming on with us tonight. But first, let me check in with everyone here, see how you all are doing. Hey, Babette. Hey, Lisa. Hey, Paul. We have a pretty quiet open tonight with the futures opening up, the Sunday night futures market. S&P up 0.14, tech up 0.1%. I mean, and that's pretty normal for the markets, as we'll talk about today. The S&P 500 normally stays within about a 1% range. It's very typical. You know, we've seen these 1% days, slightly bigger days, but they're actually pretty few and far between. And tonight's a perfect example of that. If you're looking at the futures, up less than 1/4 of a point or a percentage tonight. Now, in other news, Bitcoin has been sneaking higher on us. I don't know if you guys all saw the Ethereum breakout over the weekend, and now Bitcoin as well. Oops. So I'm going to get my Bitcoin, for you guys curious, and this is not about Bitcoin tonight. I'm just letting you know what I'm looking at right now as the stock market opens up. Let me give you the exact price. Bitcoin is at 119,320. So I don't know if you guys were paying attention last night. I'll just show you here. This was Bitcoin last night. I mean, this is what, 10 o'clock, but room went flying. So it's interesting to see the markets are. I'll pull up the futures again. You can see Bitcoin up 2.5% over the last 24 hours. Tonight, the futures market's pretty mild. So we're actually going to talk about it. Actually, ended up being perfect tonight. I'm going to bring Chuck on, and we're going to talk about how this very normal occurrence in the stock market, where markets are moving higher, that's great, but it's not like they're up 1, 2, 3%, which would be pretty unexpected. But this chugging along higher, sometimes even lower, can actually turn into a nice payday for us with options. A special little trick in the options market